Imela, I'll be doing paper two, accounting, May or June 2024. I have already done question one. Please check out the previous video for question one. I will be starting with question two, which is about VAT and stock valuation. Now, VAT, the information relates to Mpati Enterprises owned by partners John, Jacob, and Jeremiah. The business is registered for VAT, so they are a VAT vendor. They buy and sell standard and zero rated products for cash and on credit. Now you need to pay attention to zero rated products. It means that VAT on those products will be equal to 1%. They are still taxable, but at 0%. Now the standard VAT rate is 15%. Please make sure that you highlight that. Now, 2.1.1 requires us to calculate VAT amount on the goods sold by the business. And 2.1.2, we need to calculate the amount payable to or receivable from SARS on the 30th of April 2024. Now, let's continue to the next table. It gives us the balance, which is an amount due by SARS. On the 1st of April 2024, it is 5,340. So that is an asset. It represents what is due to us for VAT purposes. So SARS owes us 5,340. That means that from last month, our VAT input was greater than VAT output. Now, understand that VAT input is VAT that the VAT vendor is allowed to claim back from SARS. It's allowed to claim back from SARS. It comes into the business, so it's input. All right. VAT output is what is due to SARS. It's what the VAT vendor needs to pay over to SARS because that money doesn't belong to the VAT vendor. It belongs to SARS, South African Revenue Services. Now, they gave us purchases there. Now, with our purchases, they divided them into two. We have standard rate products. So those are taxed at 15%, which is 82,200. And we also have zero rated products. Those are taxed at 0%. So that's why for purchases, there's no VAT amount for zero rated products because when we bought these goods, we were also not charged VAT. You got it? All right. And then they gave us sales. When it comes to purchases, let me just ask you this. We have that 82,200. Will it be VAT output or will it be VAT input? It will be VAT input. Just understand that VAT on purchases and expenses will be input, and VAT on income or sales will be output. We collect that money on behalf of SARS, but we need to pay it over to SARS. Similarly, when we buy a product, that product, we bought it at VAT inclusive amount. So we've already paid VAT to whoever was selling that product. That person will take the VAT and pay it over to SARS, which is what we are allowed to claim back from SARS. It will be VAT input to us. So VAT on expenses is input. VAT on income is output. I repeat, VAT on expenses is input. VAT on income is output. You got that? Did you write it down? Don't forget it. We good? Cool. I'm going to start with the first question where they said we needed to calculate. Um, Let me just go back to it and read it as to what they want us to calculate. They want us to calculate the VAT amount on the goods sold by the business. And the business only sold these goods here. So total sales will be 839,800, all right? And they put a star there. And you need to understand that 839,800, all of it will attract VAT output because it's on sales. Sales is income, right? Now, the note that they wanted us to read, it relates to zero rated goods. It says all the zero rated goods purchased were sold at 10% below cost during a sales promotion event. This amount is included in the total sales figure. So these goods that were sold, their selling price will be included in that 839,800. And please note, we don't have the selling price of these goods. We still need to calculate it. They say this amount is included in the total sales figure, meaning that it is included in that 839,800. There were no other zero rated goods sold during April 2024. So now that total sales represents the selling price of all goods. Some goods had VAT of 15% and some goods had VAT of 0%. But in this case, you'll understand that this value that we are given, which is 839,800, it is VAT exclusive. But we can't take the whole amount and multiply it by 15 over 100 to get the VAT amount. Why? Because some goods, the selling price of some goods that are included in that 839,800 are taxed at zero rate, not at 15%. Not the whole amount. It's not the whole amount that will be taxed at 15%. So we need to take out that the selling price of those units whose VAT will be at 0%. Now, question is, how do we find the selling price of those units? The only thing we have is purchases, which is that 182,000. So since the cost price of those goods was 182,000 and we sold them at 10% below the cost price, it means we sold them at 90%. Did you get that? So 182,000 goods were sold at 90%. They didn't add the markup. They actually subtracted 10%. The other way you can calculate it is by taking 182,000, you minus 182,000 multiplied by 10. Or you can use what I've just told you right now. You just take 182,000, you multiply it by into 100 minus 10%, which is 90%. So 182,000 multiplied by 90% will give you the selling price of goods that will be taxed at 0%. Now, if you subtract the selling price of goods that will be taxed at 0%, you'll be left with goods that will be taxed at 15%. And those goods will be the ones that we calculate VAT on. Okay. So how do we do this? You're going to take 839,000, right? And then you're going to multiply it. Actually, you are going to subtract 182,000 multiplied by 90. And the reason why I'm subtracting the selling price of these goods is because they won't be taxed at 15%. So whatever you're left with will be taxed at 15%. And if they were taxed at 50%, 15%, the VAT on those goods will be 101,400. And this represents goods that were sold. So that 101,400 is VAT output because it is VAT that was calculated on sales. Sales is income. We good? Still together? We nailing this. Now, 1.1.2 requires us to calculate the amount payable or receivable from SARS on the 30th of April 2024. I'm going to start with what SARS was owing us at the beginning of the month, which was 5,340. And then I'm going to subtract that 105. The reason why I'm putting this 5,340 outside the bracket or is without brackets, it is because it is due to us. SARS owes us that money, so it is a VAT input. So that's why it's an asset. We don't put it in brackets. But that 101,400 is VAT output, and VAT output is a liability. I'm going to put it in brackets. Okay. Now, this is all I've got so far. I'm going to go back to that table and check which other VAT amounts am I given. When I come back here, I noticed that standard rate products, their VAT was 82,200, and that is for purchases. So we purchased these goods and we got charged 82,200. Will that 82,200 be VAT input or will it be VAT output? It'll be VAT input, so we show it without brackets. Why is it VAT input? Because it was VAT calculated on purchases. You got that? We good. Great. Let me go back to the table again and see what else I need to do. Um, we have bad debts written off. That is debtors accounts written off. So that 31,510 is your expense. And what did I say VAT on expenses will be? It will be VAT input. All right. I'm going to do that last. I just want to deal with the easy ones. I noticed that this one is easy, so I'm going to start with this. It is basically VAT on discount received from creditors. Note that discount received is income. Therefore, VAT on income is, it is indeed output. All right. VAT on income is VAT output. So we're going to put that 4,800 in brackets. And the 31,000 that I spoke about, that 31,510 is basically the selling price, or it's at selling price, meaning that it's what the debtor was owing us. So the debtor will owe us the selling price of goods we sold to them. And that selling price already includes VAT. So for us to get the VAT amount from that 31,250, I mean, 31,510, we are going to take it multiplied by 15 and divided by 115. And VAT on that, note that it was VAT on bad debts. Bad debts is an expense. Therefore, that VAT will be VAT input. Got it. Now you can do your math skills there. Take 5,340 minus 101,400, add 82,200 minus 4,800 plus 31,510 times 15 over 115. How much is that? 31,510, you multiply it by 15, you divide it by 115, it gives us 4,110. So you will add it because it's VAT input. So if your answer here is negative, it means that we owe SARS, so the amount will be payable to SARS. If it is negative, it means, if it is negative, we owe SARS. If it is positive, it means SARS is owing us. Negative, it's due to SARS. Positive is due to us. By SARS. You got it. You sure? You will nail this? 100%? Good. So in this case, it's 14,550. It means that we actually owe SARS. That 14,550 will be VAT payable, and you will normally record it in trade and other payables as SARS VAT in brackets. The next question, they want us to calculate. Now, this is under inventory valuation now. Okay, so for this one, because it's under inventory valuation, I need to read information about inventory valuation. So it says the information relates to sales scene. Aha, I see what they did there. The dean is a chief executive officer. The financial year ended on the 29th of February 2024. And then it says sales scene Limited buys and sells two models of cell phones, which is Clio. Clio is more expensive, and Bruma is a basic and cheaper phone. All stock is valued using specific identification method that is worth highlighting. All goods are sold for cash and on credit card. There were no units missing during the year due to effective internal control measures. Um, measures. And this is more information that is given to us. So I will just, we have done we need to do 2.2. It says this is the required. In addition to the two models of cell phones currently being sold, the directors are investigating whether a third model, the lithium, should be imported from the USA. The first batch to be ordered will consist of 300 litchi phones. See information A. Calculate the expected cost price of one litchi phone in rands. Let me see what comes after this. Oh, so this is information A, suggested importing of the litchi phones. So we see the unit price there in US dollars is $280, and we bought 300 cell phones, litchi cell phones. The exchange rate on that day was 17 rand 15. Custom duty or taxes to be paid on delivery will be 12% of the cost price. Total shipping. So this is key, because now that total shipping, they said total shipping costs from the US to South Africa will be that. So that 303,600, it is not the transportation cost of one lychee. It is a transportation cost of all 300 units of lychees. Remember, when you determine the cost price of an asset, you normally record it at the cost price, excluding the trade discount. If you were given the trade discount, you add any directly attributable costs. What do I mean by directly attributable cost? Cost of transporting that product from wherever you bought it to the point of sale, cost of installing that specific asset, cost of, in this case, it's taxes that you paid when you imported those units. Now, to calculate the cost price here, I will first start by converting the $280 to rands. And to do so, I will just multiply it by 17 rand 50. You did ratios, right? So you will know how to do that. Which will give me 4,900. That 4,900 will attract custom duties at 12%. So that 12% of custom duties will be added to the cost price of the product. And then you remember the total transportation cost, which was 303,600. You will have to divide it by 300 to determine how much it cost you to transport one lychee from United States of America to South Africa. So you will take that 303,600 divided by 300, and this will give you the unit cost of each lychee, which will be 6,500. We're still good. The next one, calculate the total value of closing stock of the Clio and Bruma phones on the 29th of February 2024 using the specific identification method. So we need, for us to determine the cost price of closing stock, we need the number of units that are part of your closing stock. We also need to determine how much were they purchased for. This is a specific identification method. So their price remains, if that thing cost you 20 rand, so when it's in the closing stock, you will just take that thing and multiply it by 20 rand to get its cost price. So there's no average, there's no first in, first out here. You just focus on the product, how much it cost you. And remember, closing stock represents what has not been sold, basically what is still remaining in the warehouse, right? So we need the units of closing stock first, and then we multiply by the price of per unit to determine the value of that closing stock. Now, where do we start? Well, we have to start here. I see that for Clio 2024, they gave us opening purchases and the sold. And for Bruma, they also gave us opening purchases and the sold, and they also gave you the closing. That one was quite easy, which is 920. But you notice that for Clio, the units on hand at the end of the year is a question mark. How do we get units on hand for any, even under manufacturing? How would you get units on hand? You first have to determine units available for sale. How do we calculate units available for sale? Write it down. Units available for sale is equal to balance at the beginning of the year. For Clio, it will be that 270 plus purchases. For Clio, it will be that 2,265 minus any returns or goods that were damaged. And when we read earlier on, they told you that there were no returns and there were no damages or stock missing. So here to calculate units available for sale, it'll just be that 270. You add it with that 2,265. It'll give you units available to be sold. If you subtract the units sold from units available to be sold, you will be left with closing stock. And once you have that question mark of closing stock, you need to determine what the cost price of each Clio is. The cost price is 8,000 Rand. Okay, so for me to calculate the closing value of Clio cell phones, all I'm going to do is just to take units on hand will be equal to purchases, so it is opening plus purchases minus the sold, which will give us 355. To find the value of these 355 units, we needed the cost price, which was given to us as 8,000 Rand. So 355 multiplied by 8,000 Rand will give you the value of 2,840,000, which is the closing stock value for Clio cell phones. Bruma, we had the value of closing stock, which was 920, right? So if we want the value of that 920, we need the cost price. And what is the cost price of Bruma cell phones? Cost price of Bruma cell phones is 2,500. So you will just take that 920 and multiply it by 2,500. It'll give you the value of closing stock of Bruma cell phones. Now that'll give you your total closing stock, obviously. Which will be 2,300,000. So the total value of our closing stock will be 5,140,000. The next question wants us to calculate the average stock turnover rate for Clio phone for 2024. Do you still remember the formula? It is cost of sales, yes, divided by, what is cost of sales in this scenario? How do we find cost of sales? Is it here? You don't know how to get it. But are you aware they told you how many units were sold? How many units were sold for Clio? It is 1,000, 2,180. Those are units that were sold. At what price were they sold at? They were sold at 11,200 each. So if you want the cost price will be actually the selling price will be that much. But if you want the cost price, what will be the cost price? You will basically multiply it by 8,000, right? Which will give us how much? 17,440,000. That will be the cost price of all the Clio phones that were sold. And then you divide it by the average trading stock. What is average trading stock? It is half multiplied by the value of your opening stock. Where do we get that 2,160? I mean, 2,160,000. Where did we get it from? You took 270, you multiplied it by 8,000. What do you get? 2,160,000. You see? Nice, ne? And the cost price of our closing stock, where did we get it from? We calculated it above. For Clio, it'll be that 2,840,000. So you add the two, the opening plus the closing, and this will be 7 times. That's it. Note that stock turnover rate and stock holding period are very similar. You should be able to differentiate the two. But you now know for stock turnover rate, the numerator must be cost of sales and the denominator must be the average value of your stock, which is the value of your opening stock plus the value of your closing stock. Then you find the sum. Whatever answer you get there, you divide it by 2 or you multiply it by half, just like we have done here. And stock turnover rate, you need to remember, it tells you how often does this business convert stock into cash. So they convert stock into cash in 7 days I mean, 7 times in a month. 7 times in a month. Okay, let's move on to the next question. The directors took the decision to adjust the markup percentage on Clio and Bruma phones for the 2024 financial year. Explain how these decisions impacted on the gross profit and cash flow of the company, as well as on stock turnover rate of each model over the past 2 years, quote figures and trends. So what I said here, um, I had to go back here and start comparing. And that's when I actually noticed that, oh, the markup for Clio has decreased by 10%, and the markup for Bruma has increased by 20%. The higher the markup, the higher the selling price. Do you remember that? So when you increase your markup, you stand a chance of losing customers. Just like in Clio, we lost 10% of the customers. So you're going to put this in writing. You will simply say percentage markup decreased by 10%, which resulted in gross profit increasing by 1,076,000. Increase in gross profit will result in the entity's cash flow increasing. However, most of the entity's cash is tied up in stock. Remember, the value of your closing stock for Clio was 2,840,000. That was a little bit too high. It means you have 2 million that is there in the warehouse and you can't use it. That's your money. You bought that stock. So your 2,840 is just sitting there gathering dust. And that's why we say money is tied up. And if you had invested it elsewhere, you would have made more money, but now it's there in the warehouse. That's why businesses cannot afford to have a lot of closing stock. Okay. And for Bruma though, I said the markup increased by 20%, and which resulted in a gross profit increasing by 487,500 compared to 1 million on the other side. Remember, Bruma cell phones are cheap, so that's why the profit only increased by half of gross profit in Clio. Clio is high quality products that are quite expensive, right? But note that the increase in gross profit has a positive effect on the entity's cash flow due to closing stock increasing to 2,300,000. And I think it was to that value, and it was coming from a very, very low value. Let me look at it. The value of my closing stock, it was 400,000. Imagine your closing stock last year was 400,000. This year is 2.4 million. Is it 2.4 million? It's 2.3 million, which is still high. And that carries the risk of not having enough cash flow because you have stock that is there in the warehouse, and that's your money that you could have used for other investments. Now, they say we must also explain on stock turnover rates. Please note that with Clio, we converted stock into cash within 7 times in a month. This is a good indication that the entity will have cash flow problem, will not have cash flow problems as stock is turned into cash faster. Whereas on the other hand, stock turnover rate has decreased from 10.2 times to 3.1 times. Now it takes you longer to convert stock into cash. It means that the entity will have cash flow problems in the future and face liquidity problems as it takes longer to convert stock into cash. If a director go goes ahead with the Litchi phones and order a lot more in the future and sell it at a markup of 40% on cost, how will this impact on the sales of Clio and Bruma phones? Explain quoting figures to support. Now, this one was a little bit tricky because I'm thinking Litchi will be of good quality, which might result in Clio phones Clio sales going down. And then it'll also discourage because it'll be right in the middle, okay? It'll also discourage people that are buying Bruma. They'll be motivated to buy Lychee because it's good quality and it is not as expensive as Clio. So this is what I said, okay? Lychee phones cost less per unit compared to Clio and more compared to Bruma phones. Lychee phones will be sold at a lower price, which is 16,500 per phone, and this will increase the demand for the phones if and only if they are of good quality. Clio sales will decrease as they will be more expensive. Now, Lychee phones may not reduce the demand for Bruma phones. Bruma phones will be cheaper, which is 4,250, and customers will prefer to buy Bruma phones rather than Lychee phones. However, some customers might consider cheaper, good quality, which is Lychee phones. It'll cost them 9,100 compared to Clio, which will, ah, well, actually, thinking about it here, Clio is a little bit more expensive. Um, I don't know why I wrote it as 8,000 there. But this is what it will be. It'll be 8,000 multiplied by 1.4. So this is how much it'll cost you. I don't even know why I'm calculating the selling price of Clio because it was given to us here. The selling price it's 11,200 compared to 9,500. Okay. So basically people will rather buy Bruma than Clio as it is a little bit cheaper. And this will only work if Lychee is of good quality, just like Clio. Now, when it comes to Bruma phones, I have indicated that some people might still consider buying Bruma phones than to buy the new Litchi phone, because they will still not afford that 9,100. Because when you look at Bruma cell phone, it'll cost you only 4,250. It's ample half of 9,000. So you see that those guys were not affording Clio. So they will still stick to Bruma because there's a huge difference between the two. It's a huge jump from Bruma to Lychee as well. So I think they wouldn't move. They will still buy Bruma. Okay. And this is it with respect to question 2. In the next video, I'll be going through cost accounting, i.e., aka manufacturing. Read through this and attempt to answer all the questions. I've already included them in Google Classroom, so check it out and start answering all these questions. Alrighty then. That will be it from me. And in the next video, we'll be tackling cost accounting. Thank you for your support again. Awesome.